Good morning and welcome back to class. Today we're going to spend the hour talking about taxes that are taken from our paychecks. We are going to spend the next several class sessions actually talking about the different kinds of taxes that are taken from our paychecks. In the prior classes, we talked about calculating gross wages. Those are wages that we earn before they take any taxes out, several different ways. One of the ways was on an hourly paycheck way, another was by piecework, and another was by commissions. That was 3.1 and 3.2. Does anyone have any questions about any of the homework on calculating gross wages? You should at this point have all of that done and be at a kind of a comfort level with calculating gross wages. Is there a problem with that at all? Great. I've given you a handout for the year 2001. The book is actually a book written in the year 2000, and the information in the book is year 2000 book. We have always, in this class, stayed current. There's always been a handout that dealt with current tax tables. So this book has got a supplement, and every one of you now have one of those. If for some reason you would lose it, they're available in the Math Resource Center. The information that is in this first couple of paragraphs I think is very interesting, and we're going to take a couple of minutes and talk about the history of the taxes that are taken out of our paychecks. And I would encourage you, I think it's quite interesting, and all of that's available, in the book. In the previous two sections of this chapter, we discussed the computation of gross earnings. You know, if you've been an employee, that typically you do not receive the amount of the gross earnings on your paycheck. What you earn and what you take home. Fran said, wow, far different. And is there just one tax that they take out? No, they take out many taxes, which is why I'm saying we're going to spend several days talking about the different kind of taxes that come out of your paycheck and how they're calculated. Each one of them has a different formula, they're sort of based in different ways, and they sort of have a different history. The other thing that we're going to learn as we progress through this is that your employer pays taxes to the government for you that possibly you didn't even know were paid for you. Did you know there are taxes that are paid on you that you don't even see, that you don't have any part of your paycheck that shows that? So if you were to decide to become a business owner, small business owner, you would, on top of the amount of money that you would pay your employees in salary, have some tax obligations for those employees. And that's an overview of what we're going to do in 3.3, 3.4, and 3.5. We're going to talk about all of those taxes that are paid by an employee and are paid by an employer. The employee being the person that's working and getting the paycheck, the employer being the person that hires that person and is writing the paycheck, okay? Some taxes are assessed at the same rate for every taxpayer. So they are a constant tax. They are taxes that everybody pays at the same rate. So whether you're making minimum wage or you're a CEO of a large corporation, you're going to pay the same level tax rate. The first two taxes that we're going to talk about, FICA and FUTA, are level taxes. And then when we turn and start talking about the income taxes that we take out for the state and the federal government, those are graduated taxes. What does that mean, a graduated tax? What does that mean?
The more you make, the percentage that comes out changes.
Right. The more you make, the more you pay. That's right. So someone earning a minimum wage versus Bill Gates, right? They pay a larger percentage. So there are flat taxes and there are graduated taxes. The first couple of taxes we're going to talk about are flat tax rates, which means for the first, for the money that anyone earns, everyone pays the same percentage. Okay? Let me get one more packet of these put out here. Take a minute here. I'm sorry. Because there's no way that we can work with this information without these handouts. I'm going to see if you'll just hand those back to Kari and there you go. There's a packet for each one of you. So the taxes that everyone pays the same we call flat taxes. Is that all right? Sometimes taxes have what's called a floor or a ceiling. If everyone's paying a flat tax rate, that can happen until a certain amount is reached where there'd be a ceiling, so that once you go to that ceiling, you don't pay any taxes above that. Or there can be a floor on a flat tax, which says you don't pay it until you reach a certain point, and then you pay it above there. Does the idea of a floor or a ceiling make sense? A ceiling says you pay it from $0 clear up to the ceiling, and at that point it stops. A floor says you don't pay it until you reach a certain amount, and from there on you pay the tax on all monies above and beyond that that are earned. Okay. The first tax that we're going to talk about is FICA, F-I-C-A. That stands for the Federal Insurance Contributions Act. And if you look on page 2 of that payroll handout, we're going to talk a little bit about the history of it. I think it helps make sense and put it in perspective. Second paragraph there. It says in 1935, the U.S. Congress passed the Social Security Act, 1935. It provided basic retirement benefits to old age survivors. The portion of the Act which mandates tax withholdings is sometimes referred to as the Federal Insurance Contributions Act, or FICA. Since 1935, because of changes to the system, disability, medical benefits have been added to it and are now provided. Originally in 1935, it was 1% of each employee's earnings up to a ceiling of $3,000. So employees would pay 1% up to the $3,000 mark, and if they made money over $3,000, they no longer paid those taxes. The tax got up to 7.65% on the first $51,300 of earnings in 1990. So it went from 1% on the first $3,000 to 7.65% on the first $51,300 in 1990. At that point, they decided to break the tax into 2 separate pieces. And if you look at a paycheck that you have, you maybe will see those 2 pieces separated on your paycheck. One of them is called the Social Security tax, often said, just an SS, Social Security tax. Often also it goes OASDI, that stands for Old Age Survivors and Disability Income. Look at your next paycheck and see if that one's on there. That's what it stands for. Separate is a Medicare tax, which is hospitalization insurance, sometimes abbreviated as HI. In the year 2001, these rates are current right here on this handout. The Social Security rate that you would pay would be 6.2% of the first $80,400 in gross wages. If you would reach that ceiling of $80,400, you would pay no further Social Security taxes above that. So if you were in a position that you made more than $80,400, the paycheck in which you went over that limit would not have any more Social Security. So there is a ceiling on that. The Medicare taxes, however, are taken out of all wages. So the person that earns the most money in the whole United States pays 1.45%, just like you do if you make minimum wage. So there is no floor and no ceiling on the Medicare portion. So instead of having those combined, they are now separate, and there's a ceiling on the Social Security portion of that. Medicare tax is truly a flat rate. Every taxpayer pays exactly the same rate of their gross income, regardless of how much they make. The Social Security tax, however, has a wage ceiling beyond which no tax is assessed. Neither of these taxes have a floor. For the test, you will not be responsible for memorizing those numbers. They will be provided for you, and they change every year. Does that make sense? I'm not asking you to know those figures. I'm asking you to calculate gross wages, calculate Social Security taxes, calculate the Medicare taxes that are taken out of a paycheck when I give you the ceiling and I give you the percentages. Okay? Same thing when we do income taxes. We're not asking you to memorize tax tables. We're asking you to use tax tables because they change on a regular basis. And if you were doing any kind of accounting, you would be having them as a reference. So those numbers will be on the next test, they'll be on the final, and you're more than welcome to refer to them with everything you do. I've done a set of class notes that have to do with FICA, and we're going to get out your calculator and follow along with me as we go through this, and we're going to process paychecks and do FICA calculations. If you'll notice on the very top of that, I've got that the following examples, we're going to use the 2001 rates, 6.2% of the first, let me get these up on here. Let me get a sheet of paper. Does everyone see where we are on their handout? 2001 rates for Social Security are 6.2% of the first $80,400. That's it, got a ceiling. And the Medicare is a 1.45% of all gross wages. Is there a question on what those numbers mean? And just as a point of information, and we're going to talk about it later in the day, those amounts are deducted from your paycheck. Those amounts are matched by your employer and sent to the government. So an employee's responsibility is to pay these amounts, and the employer not only withholds those and pays them to the government that come out of your paycheck, but match that amount and send it to the government for you. So that's part of the benefits that your employer pays for you. Let's get started. It says Matt has gross earnings of $7,400 for the month ending October 31st, 2001. His cumulative earnings prior to this month were $66,600. Calculate the amount of his Social Security and Medicare taxes. Why do you think I picked such large salaries? Does those really relate to us today? Not really. I picked such large salaries because we want to talk about examples in which we go over the limit. And I needed to get numbers where by the end of the year we're going over that $80,400. So the reason I picked these large numbers is so that in the examples that follow, we'll be hitting that ceiling and going over it. And so we're going to use those same numbers to calculate when we hit the ceiling. Is that okay? Great. So what we need to do as we come through here is realize that prior to this paycheck, Matt's total gross earnings were $66,600. With this paycheck, what will his new cumulative earnings be? $74,000. Nice chunk of change, yes. Has he gone and hit the ceiling? He's under the ceiling in every way, right? So what we need to do is just straightforwardly calculate Social Security, calculate Medicare. Is that all right? The next line on our chart says, is there a taxable amount if the ceiling was just passed? The ceiling has not just passed. Is that all right? Those are going to be in the next example. So I come down here. He is going to pay Social Security on all dollars. So we're going to do his current paycheck, $7,400 times the Social Security tax rate. It's a percentage, and I need to change it to a decimal. Look at the top of the page. Social Security tax rate is what? 6.2%. If Matt's earning $7,400 during this month, his paycheck needs to have deducted from it a 6.2% Social Security tax. Total would be $458.80 for Social Security. All of those wages, every penny of those wages are under the ceiling. We need to pay Social Security on all $7,400. We did that top calculation to see if we were over the limit. And I'm going, no, we are not over the limit. Questions so far? You will not have this form available to you on the test. The model that I've set up here is something that you need to get in your mind, and you need to, given those numbers, be able to process this pattern without the sheet that I've given you, okay? That makes sense? All right. We know that Medicare never has a limit. So we are always going to take the total amount of all the current gross earnings. We are going to multiply them times the Medicare percent, which at this point is 1.45. Change to a decimal, that's 0.0145. We pay every time all monies get charged Medicare. And out of that paycheck is going to come $107.30 for Medicare. And if you look at your next pay stub, I'm sure it would list gross earnings, and it would list your Social Security and your Medicare separately. If not, it would list it together. The two together are called FICA. Total FICA would be the two of those combined. That make sense? Okay, moving on. Another month passes. It's now the end of November. Matt's on a salary, makes the same amount every month. So he's getting another $7,400 paycheck. This is now the end of November. Does that make sense? His last month's cumulative earnings, the amount of money that he earned including the October paycheck, was $74,000. That was for 10 months' pay. We want to, during this month, calculate the amount of Social Security and Medicare that he's paying. In this example, and the reason we're giving you this example, he hits and exceeds the Social Security ceiling. So we need to be paying attention here to what happens during a month where we hit the ceiling, okay? And let me scoot this down now. Whoa, make you dizzy. Prior to this month, Matt had earned $74,000. This month, he earned $7,400. So his new cumulative total is $81,400. He's over the limit. He does not need to pay Social Security on the amount of money that is above $80,400. He does need to pay Social Security on all of the wages that are under $80,400. Think about his current paycheck, $7,400. How much of it is under the limit and needs taxes paid on it? How much of it is over the limit and needs no taxes paid on it? The biggest mistake is people get these two mixed up. Okay? Let's go through the calculation and we'll try to do some practical examples. Here I go. I take the tax ceiling of $80,400. His prior earnings were $74,000. The money between the $74,000 that he had earned last month and the ceiling is $6,400. There is exactly $1,000 that is over the ceiling. Cum earnings at the end of this time will be $81,400. $1,000 is above the ceiling. There's $1,000 I do not pay taxes on. There are $6,400 that I must pay taxes on. Most common mistake is taking that $81,400, subtracting the $80,400 and saying, ooh, I pay taxes on $1,000. Right? Think about it. When I hit 80,400, everything above that is not taxable. Everything below that number must have taxes paid on it. You need to separate the two pieces and make sure you see which part is below the limit and which part is above the limit. Okay, so we've got $6,400 that we're paying taxes on. The last $1,000, no Social Security taxes. So instead of using the complete amount of his paycheck, $7,400, I only use the $6,400 that are under the limit. I take that times 0.062. That gives me Social Security taxes of $396.80, which is less than the Social Security I paid last month because I don't need to pay Social Security taxes on the monies that are over the limit. Medicare, however, is truly a flat tax. Everybody, no matter what their wages, pays the same amount. So the Medicare tax calculation for this current month, even though I'm over the limit for Social Security, is total wages times 0.0145. I'm going to owe that same $107.30 for MAP that we owed last month. Is that making sense? And you know what we're going to do on all the homework and all of the test questions. We're always going to give you one where you get to pay all of the Social Security taxes, and then we're going to beat to death the amount where they're going over the limit to make sure you've got that piece of the puzzle figured out. Okay. Just, you knew that, right? Okay. So let's talk about the next month. End of the year. It's now December 31st. Matt's gross earnings remain exactly the same. He has $7,400 of earnings during this month. His cumulative earnings prior to that were the $81,400. We're going to calculate his Social Security and Medicare taxes. What do we know about his Social Security taxes? He went over the limit last month. If he's over the ceiling, what's going to happen with Social Security this month? Not going to pay anything. Great job. That's right. We're going to come down here and say his cumulative earnings last month were $81,400. He's got $7,400 in wages. He's over the limit. He's now earned a total of $88,800 for the year. So when I come down to do the Social Security thing, I said, have I just passed the limit? No. Don't have to worry about that one. And then I say, the computations for Social Security, no, don't do them. We are over the ceiling. No Social Security taxes are going to be taken out this month. So the only calculation I need to make on months where he's totally and completely over the limit is the Medicare calculation. So I'm down here doing $7,400 times Medicare. The only thing that's going to come out of this month's paycheck for FICA is going to be the $107.30 that I pay month after month after month, no matter what. I always use Bill Gates as my rich man example. I guess people all know who he is. I kind of like computers, so I'm pretty impressed with him, and I guess I've talked about him at different times, but he pays that 0.0145 times every one of the millions of dollars that he earns because there is no limit. But if you actually earned more than $80,000 in your, or $80,400 in your first paycheck, you'd be done with Social Security the very beginning of the year. This used to be a more common calculation back when the maximum Social Security rate was in lower numbers, $10,000 and $11,000, and people went over it on a regular basis. It's been raised to such a high limit that it's not a calculation that is as comfortable in the last few years with people because they're just not aware, because most of us aren't making more than $80,400. Yeah? But we still need to be able to make these calculations. How does that concept sort of work for you? Yes? And again, the part of the puzzle that you have to keep track of is the month that you go over the limit, how much is actually over the limit and how much is really under the limit. It's the limit minus the prior cum. Most people take the current cum and subtract the limit, which gives you the amount over. Okay. In each case, those things that I explained to you, the money would be taken out of your paycheck by your employer, and those monies are actually deposited into a federal account and sent to the government with your Social Security number on them. The employer, as a benefit to you, takes the same amount of money out of his pocket, matches your Social Security and Medicare amount, sends that to the government also. So what happens to the person that doesn't have an employer? What do we call someone who... Self-employed, that's right. The next issue that we need to deal with is the self-employed person. They don't get to pay half and let the other half slide. Top of the next page in the handout in the class notes. What happens when you're self-employed is you get the privilege of paying what they call both halves. You get out of your paycheck to pay the amount that the employee pays, and then you get the privilege of also matching that with the amount the employer pays. What are some professions that someone can think of where people are self-employed?
Speaker, like a lecture.
Sure. Anything else?
Interior decorator.
Decorator. He said painter. Sure. There are a lot of people that are self-employed. One of the benefits you get from having an employer is they match your Social Security. And one of the lack of benefits that happens when you are employed by yourself is you get to pay both parts of that. It's a very big number. Look at the top of the next page. It says, in 2001, self-employment rates are, and they are actually double the rates that we had on the prior page. If you are self-employed, you're going to pay a combined FICA, which is Social Security and Medicare, of 15.3% of all wages. That's a pretty hefty amount of money, up to the $80,400 limit. FICA is the Social Security and the Medicare. After that $80,400 limit for Medicare, you would pay 2.9, which is double the 1.45 amount. Okay? We're not going to deal here with going over the limit with self-employed. And make sure when you're doing your homework, there is a couple of problems there where we're dealing with self-employment, that you use these numbers instead of the prior page numbers. Like let self-employed sort of make lights go off and bells flash and things, okay? So here we go. We've got Mary. She is self-employed, and this is the first quarter. And so we're not going to worry about limits is what I'm telling you when I say it's the first quarter, okay? She had net earnings of $18,000 this quarter from her interior decorating shop or her painting business or her speaking engagements. How much should she pay in taxes for FICA? She's getting a quarterly paycheck. It's big money. Big money. You can do this two ways. I've set these up both as proportions, which we'll do first, and then I've set it up using that calculation that some of you like that uses the percent formula. 15.3 over 100, that's the rate, is proportional to X, which would be the tax amount, the part, over 18,000. In this particular case, the A, the amount, the part would be the amount of taxes that you would pay. You're going to cross multiply here and figure out that out of that $18,000 paycheck for the quarter, Mary's going to owe $2,754 in FICA taxes. Again, all of it's under the limit. A lot of money, big bucks, 15.3% is a bunch. If you choose, you could set it up as a calculation just simply using the percent changed to a decimal times the base, 0.153 times 18,000. Stick that in your calculator. All of those wages are under the ceiling, so your total FICA amount would be $2,754. Whether you set it up as a proportion or you set it up with just the formula, you're going to get the same amount of money. Questions on that calculation? The things we've talked about today have to do with taxes that actually come out of your paycheck. Okay. The other flat tax that we're going to talk about in our next class section, and we've taken 3.3 and I've divided into two separate pieces. It's almost more than I can handle in an hour, is another flat tax, and they are the federal unemployment tax and the state unemployment tax, referred to as FUTA and SUTA. Those are also flat taxes, and that's the reason they're all in one section of the book, but handled differently. They both have ceilings, very similarly to this. They're both flat taxes. But do you remember ever seeing FUTA or SUTA on your paychecks? Guess why? They're not the responsibility of the employee. They are the responsibility of the employer. So when we get our class together for the next session, we're going to come in and be small business owners as opposed to employees. And so we're going to be making calculations that you don't see on your paycheck because as a worker, we don't see that. But if we owned our own business, there are taxes that are flat taxes that have ceilings that need to be paid to the government. When you do your homework, I want you to not use the green binder because those problems were worked with the rate tables that are, this book is a 2000 book. The problems that are in there were worked with the 2000 tax tables that are in the back of this book. So all the answers that are in the green book would need the tables in the back of this book for year 2000. You're going to use the payroll handout instead. That's the 2001 update. And we're going to use current information, and the answers that are in here were worked with 2001 calculations. I warn you of that because I was doing the homework, because I always do the homework, and then I had my book flipped open and I was getting the wrong answers, and I spent about an hour being very frustrated looking at the answers in the back of the green binder, working the problems from the handout. Yeah, you're laughing. It could happen to you. It could happen to you. And I wasn't off by but a couple of dollars, but I was very frustrated. And then I realized that the problems are actually the same problems, but the answers in here match answers that deal with the 2001 tax tables. So let's take a minute and look at the homework in here. Again, I encourage you to read this handout because there's excellent information about our tax system, and as workers I think that the tax system is pretty interesting. I think that's some of the most interesting things in this book. What are we going to do here? Anybody got an idea on any of this homework that they'd like to get started on? Is there one we want to talk about? Everyone's quiet. Look on problem 23 for just a minute, section B. Do you see where it says Kelly is self-employed? Bells should go off, lights should be flashing. That's a different problem than the rest of these. So kind of put a star by problem 23 so you realize if you don't get the right answer that you've missed a very important part of that, and that is self-employed. Those taxes are going to be a lot bigger than the taxes will be in some of these other problems. That's the reason I wanted to make sure you did, 23 versus Frederick in the problem 25. Next question. When you go to work, what are some of the things they ask you to fill out about taxes? There's little forms that you fill out. They ask, yes, and what are some of the things they ask you on there?
What you're claiming.
What you're claiming, good. What else? Married or single. Has anything we've talked about with Social Security or Medicare mentioned either one of those items? Good. There's some of these problems that say, Frederick is married. He claims so many deductions. Does that have anything to do with the calculation of Social Security or Medicare? No. Those items are on there so that you're aware that you're going to know that information. But those do not have any bearing on the calculation of Social Security. These truly are flat taxes. Everyone, no matter how many deductions, no matter whether married or single, the Social Security, the Medicare, you do not need to worry about that. And in these story problems, here on page 9 of the payroll handout, oftentimes they're going to say they're married, they claim so many deductions. And I want to point out, we just ignore those facts when we do Social Security and Medicare. We also ignore those when we do the FUTA and the SUTA, federal unemployment taxes, state unemployment taxes. It's to get you to kind of tune in to those numbers, because what we're going to do in 3.4, section 3.4, when we calculate income taxes, is those are going to become very important parts of our calculations, right? Okay. But as you read those, don't be confused with the fact that they're telling you information you don't need. That's exactly what it is, information you don't need for that. So anything else we want to do on our homework? Okay, I'll let them stop the tapes. I'll let you start working, and I'll come around and help anybody that's got questions.